All right, welcome to our cryptocurrency special event. This is really the ultimate guide to cryptocurrency today. We're going to get a massive education with one of the experts in the cryptocurrency space. It's Anthony Pompliano. He hosts the Pomp podcast. He is a cryptocurrency expert. He's been doing it for a number of years. He's had a history of allocating capital across digital asset classes on behalf of institutional clients, including public pensions, university endowments, private foundations, and large family offices. He hosts the Pomp podcast. And I think I was introduced to Anthony by our mutual friend, Robert Kiyosaki. And Robert Kiyosaki, I think, had you on the Rich Dad radio show. And then he calls you when he needs crypto advice. Is that right, Anthony?
He does. Robert is fantastic, and he's all in now. He's gone from gold and silver only to gold, silver, and Bitcoin. So it's pretty cool to see.
Yeah, and I'm a longtime real estate investor, and also precious metals as well. So real estate, gold, and silver has been my thing. I'm not a fan of paper assets, not a fan of the US dollar. I'm not a fan of government printing money and having my family's retirement tied to that. So cryptocurrency emerges a number of years ago and becomes this really fascinating play for me, something I've been getting more and more excited about. I've started moving money over to my outlet account, started making more money there. I'm, looking at buying more Bitcoin and other things. So should people, number one, be worried about something that's brand new like this? I think I see that reflected in a lot of questions that we've had on today's show. Should I be worried about investing in something that started really in 2009?
Yeah, so I think it's a great question. First, let's look at kind of the alternative options, right? So you've got the US dollar, you've got something like gold. Gold obviously has a track record of 5,000 plus years. The US dollar in its current format since about 1971. And Bitcoin specifically has been around since called 2008, 2009. And so that is a concern that people will have, right, if they don't understand it. And so as you spend more time learning about it, what you essentially ask yourself is, what is the thing that drives the value of these three things? Well, the US dollar is the easy one, right? It's backed by the US government, kind of the full faith and credit. It's not actually backed by a commodity. A lot of people will argue it's backed by lots of guns, bombs, and bullets, right? And kind of that's what's given it its global reserve status. Gold, on the other hand, is a hard commodity, can be used for a lot of different things, and it's got the benefit of the Lindy effect. It's literally been around for 5,000 years. Bitcoin, on the other hand, is a digital currency. And the reason why digital is an important part of that description is Bitcoin is solely based on two key components. The first is it is the strongest computing network in the world, meaning that if you take the computing power that is running that network, it is bigger and stronger than any other computing power in the world. And so it's backed by kind of this strength and security of the strongest computing network. The second piece is the monetary policy. So the reason why people trust the US dollar is because we say the government is telling us what they're doing, right? Well, obviously, we've seen over the last kind of 90 days, the Fed's balance sheet has expanded 75%, right? And so it's kind of 12 to 15 people go in a room, they make some decisions, and they come back and they tell not only the 330 million Americans what they're going to do, but really kind of the world economy is driven by the decisions for that US dollar. Well, with Bitcoin, it is fully transparent, meaning that the monetary policy is programmatic and transparent. We actually know every interest rate decision, every monetary policy decision out into the future over the next number of decades. And so that level of transparency in programmatic kind of monetary policy is what's driving people to trust it, right? I don't need to trust a human and kind of the emotion and bias that comes with that. I can simply trust that this computer code that I can actually look at and see what it says is going to do what it's supposed to do. And so far, it's done that. It's been the best performing asset in a US dollar denomination over the last decade.
Wow. Yeah, I just see Bitcoin exploding, going up and up and up. So give us a little history lesson here before we dive into some deeper questions. We've got a lot of great questions from our audience today, and I want to get to those questions. But first, I think we need a ground floor here for a lot of us. How did this start? What were the weird, mysterious forces that emerged that brought this to the fore? And how did it become such a global force?
Yeah, so let me go back a little bit to go forward. What a lot of people don't think of is double entry accounting is probably the greatest human invention that we know of today, right? And why I say it was an invention is before that there was single entry accounting. Literally, people would write, John gave me three chickens. I owe him a rug, right? And it was kind of very descriptive in the way that people did accounting. In about the 1400s, the Italian merchants started to use something called double entry accounting. It was written into a book that Leonardo da Vinci read. He thought it was really interesting. He started to tell all of his friends about this idea of double entry accounting or debits and credits. That system was then picked up by the Medicis and the Medici Bank. They then popularized it, and really that drove a lot of the human production over the next kind of 600-700 years to where we get to today. Now, in 1989, there was a Japanese researcher that came up with the idea for triple entry accounting. So the idea that I don't need a bank to do the debits and credits, I simply can have a shared ledger, a system where everyone can see in the middle. And the reason why I bring that up is it's very similar to Monopoly. So if you and I play Monopoly, there's four players and there's a bank, but there's no banker. There's not kind of a fifth person who acts as the bank. The reason why the game works is because you and I can see the money going in and out of the bank and also the money going in and out of all of our accounts, right? And so there's trust through transparency. If you ever play with like a child and they put their money under the table, immediately everyone says, hey, you're doing something funny, like you can't do that, right? You got to keep your money on the table, you got to have transparency. And so really what Bitcoin is a manifestation of this idea of triple entry accounting with full transparency. So in 2008, there's a cryptographer who's anonymous or pseudonymous, went by the name of Satoshi Nakamoto. They wrote a 9-page paper, published it, and said, I'm going to create this digital currency that is fully transparent. It's got programmatic monetary policy, and I'm going to release it to the world. And in January of 2009, they released it to the world. They literally sent it out in an email to a very small list of people. And that has since grown to now tens of millions of people around the world are using this thing in a fully transparent manner. And so that growth can be looked at as two things. One, when you create a currency, there's a lot of questions. Who created it? Why? What's going to happen to it? All of those things. And so when you look at it from an individual seat, knowing who the creator is feels like it should be important. But when you actually look at it from a geopolitical standpoint, what you have to understand is that there's one shot to separate state and money. Right. And that separation of state and money is what Bitcoin ultimately is trying to do. It's trying to separate that money away from the state's control. It's a big, audacious, kind of scary goal. And so when you go to do something like that, if you have a centralized structure, right? Take a look at Napster was a great example. They tried to use decentralized file sharing to attack the music industry. Well, what happened is they called Sean Parker in for congressional hearings and they shut the company down. They shut the company's servers down and they're able to kind of stamp it out because it had a centralized structure. When you have decentralization like Bitcoin, there's no CEO to call. There's nobody to go arrest. There's no one server that you can shut down and shut down the whole system. And so the decentralized nature and this pseudonymous creator actually is part of the defense mechanism. And so when there are these nation state that look at it, they can't do anything. And that's where you get, U.S. Congress people have now gone in front of Congress in these congressional hearings and literally said, we cannot stop this, right? There's no way to shut this down. And so I think that separation of state and money is a really important kind of detail. And the creation of it and the pseudonymous creator is an important part of that story and how we get here.
I think that's fascinating because as we see, all government currency in world history has collapsed at some point, right? And so when you see the Federal Reserve, you see the money that's being printed right now. You mentioned the Fed's balance sheets. They're buying up all of these corporate bonds. They're junk bonds. They're mortgage-backed securities. They're printing money like crazy. They announced last night that they don't have enough coins. They're having to print more coins into the system. I mean, this is exactly what we're talking about. This is the fear. I have more fear of that than I would of Bitcoin at this point.
Well, and if you remember how we got here with the U.S. dollar, right? So the Federal Reserve was actually created, in a very overgeneralized manner. A small number of people went into a private meeting, and they basically pushed through the idea of the Federal Reserve when a bunch of politicians were at home, right? And so if you go and you kind of read about the history of the creation of the Federal Reserve, it was done in a very kind of corrupt backroom way, and that ultimately leads to where we are today. Now, in the United States, and this is a really, really important point, in the United States, the US dollar works pretty well for majority of people, right? And that's also true in most developed nations. Where people are flocking to this is in places where their currency has failed them, they don't trust their government, and they realize in a very, very obvious way how bad state-owned money can be for majority of the population. So let's go to Lebanon right now. The Lebanese lira has fallen like 75% to the US dollar. Bitcoin is exploding in adoption there because they're literally saying, hold on a second, either I trust my government and I trust humans to make decisions and kind of avoid being greedy or incompetent, or I can trust a computer-generated programmatic monetary policy that's fully transparent. Of course, the computers, we're going to trust the computers over humans, right? I always go back to, in other parts of our life, we trust computers over other humans. So if I get lost in a new city, I ask Google Maps for directions. Now, I don't ask somebody on the street corner for directions, right? If I want to answer a question, I don't ask my friend, I ask Google. Eventually, that's going to seep over into money as well, and we're going to trust the programmatic, transparent monetary policy over a human-led monetary policy because we see what we just saw here in the United States. We literally had an economic shock, and I couldn't stop them. You couldn't stop them. No one could stop them. They just printed and printed and printed $3+ trillion. And what that does ultimately is it hurts the 45% of Americans who are holding cash and don't have investment assets.
Right. Yeah, the people that don't, they think that by putting money into their mattress, that's smart, or having it in some sort of a savings account with a 0.01% interest rate, they're losing money every day that they have that money. They have their family's retirement or future tied to that paper dollar, paper US dollar. We've got a lot of questions from our audience today. I want to get to a few of them here. Here's one that wants to know, what is the top 5 cryptocurrencies that you think will be providing the highest returns over this next cycle? And how high do you think Bitcoin will ultimately go in value?
Yeah, so 2 pieces of this question. First, I want to separate out, there's a lot of digital tokens that have been created. There's like 4,000 or 5,000 of them now. There are very few that are trying to be cryptocurrencies, right? So there's kind of 3 types of tokens. There's cryptocurrencies, there's something called a utility token, and then there's a tokenized security. So tokenized security is basically a digital form of an equity. So put that to the side. Utility token is something that's very akin to either a gift card or like Chuck E. Cheese tokens. It gives you access to something, but it's not actually being used as true money. When it comes to cryptocurrencies, there's 2 buckets in my opinion. There's stable coins. Stable coins are digital tokens that are backed 1-to-1 to an existing currency. So there's a lot of US dollar stable coins. They act like dollars. They have the same monetary policy. It's just in a digital format. Not very interesting. It's kind of like a slight improvement to what we currently have, but it's more of a technology improvement, not a monetary policy improvement. When it comes to Bitcoin, Bitcoin is the big monetary policy improvement, in my opinion. To me, it is the only cryptocurrency that actually matters, and specifically highlighting the word currency, right? Trying to be a store of value or a medium of exchange. And so I think that there's a lot of noise because there's so many tokens, but clearly understanding currencies versus utility tokens versus tokenized securities is important. On the currency side, Bitcoin's the only thing that matters. Now, in terms of kind of how do I think this plays out over the next couple of years, there's 2 inputs to kind of the value of Bitcoin. You obviously have the true value of Bitcoin, and then you have the currency that it's denominated in. And so if you take Bitcoin denominated in US dollar value, it's the best performing asset over the last 10 years or so. It's literally gone from about 1/3 of a cent to today. It trades somewhere between $9,000 to $10,000 depending on the day. Hyper volatile, but also incredibly big upside. Now, when you determine value of something like gold, for example, the 2 inputs that you look at are supply and demand. We kind of know how much existing supply of gold there is, and we kind of know how much comes online every single day. And then we try to model out or forecast demand, and that gets us both today's price point and also what we think gold will do over the coming years. The difference with Bitcoin, for example, though, is that we actually know with 100% certainty how many Bitcoin are in existence. We know exactly how many Bitcoin come online every single day, right? It's verifiable in a very transparent way because we can simply look on this blockchain. And so what you do is you hold 1/2 of that equation constant. You know with 100% certainty there are 18.3 million Bitcoin in existence today, and every single day for the next 4 years, 900 Bitcoin a day will be created and put into the circulating supply. And so what it does is it then shifts you to, all you have to do is forecast demand. And so if you simply take the existing growth kind of curve that we've seen, so you don't accelerate it or decelerate it, just exactly what we've seen for the last 10 years, Bitcoin will hit $100,000 price point by the end of 2021, right? That is what all of these charts and graphs and analysis show. Now, I caveat that with, if demand changes, if it increases or decreases, that kind of price trajectory will change. I tend to think that if anything happens, you're going to have an increase in demand because you have central banks printing so much money. They're literally going to force people to go find a currency that is disinflationary or deflationary compared to having a drop in demand. That is what remains to be seen. But as of today, if you take the Bitcoin system and you simply model out the demand growth that we've seen over the last 10 years and continue on that same trajectory, you'll have a Bitcoin US dollar price of about $100,000 by the end of next year.
Whoa, oh man. Which brings me to my next question here from one of our audience members. What needs to happen for Bitcoin to become mass adopted? Also, if Bitcoin becomes the reserve currency of the world, what will happen to all of the fiat currencies, meaning government currencies, the US dollar, the euro, etc.? Great question.
Yeah, so two things. I think from a mass adoption standpoint, the biggest thing is time, right? Again, you started out asking me about like, hey, Bitcoin's only 10 years old. Why do people trust it? And so I think that the longer that Bitcoin is around, the more trust it will have. It's kind of the Lindy effect. And so that's kind of the hope there, is that as more time passes, people will begin to trust it more and more. So to me, that's the biggest step. In terms of what happens on a global reserve basis, this game theory is super interesting to me, right? So Bitcoin is so multidisciplinary. It's got geopolitics, it's got economics, it's got math, it's got computer science, cryptography, all this stuff wrapped up into one. But ultimately, what we are seeing is, absolute currency wars happening, right? So if you look at China versus the U.S., I mean, President Trump has been tweeting nonstop about the fact that we need to devalue the currency, lower interest rates, print more money, do all of these things to remain globally competitive against kind of our economic competition. Well, while that's happening, obviously every country that does any sort of bilateral trade with another country, they know that there's currency manipulation going on. And so what we believe will end up happening is people will eventually just say, look, when I do trade with you, I don't want to have a discussion about should we settle this trade in the yuan or the yen or the US dollar. Instead, let's just use the currency that we all agree nobody can manipulate. It's fully transparent, and none of us can actually infiltrate the network. And so that kind of game theory of opting out of the fiat currencies where all the manipulation happens and opting into using something where there is no manipulation on the monetary policy side is kind of a foregone conclusion, in my opinion. It's just kind of, when does that start to happen? What that then leads to is, do we see a complete kind of collapse of all the fiat currencies, or is there coexistence? I'm of the belief that you will have coexistence probably for my lifetime. So I don't see a world where like the US dollar goes away and Bitcoin becomes a global reserve currency. Instead, what I think you start to see is Bitcoin's continued rise and adoption. You eventually continue to see the weakening of the US dollar, which is exactly what they're doing right now. And at some point in the future, probably 20, 30 years from now, you'll get a switch. But it won't be kind of a single point in time where in the past, the switch of a global reserve currency has really happened at the end of a conflict, right? You've had literally military war. One country dominates another, and then they install their currency as a global reserve currency. Well, Bitcoin has no military, right? It's a digital thing. And so it's kind of this like passive protest of the fiat currencies. And I don't think it happens, in the next year or so. I think that's something that's more kind of 10, 20, 30 years out. But I do think that it'll happen in my lifetime.
Wow. Fascinating. One of the questions we had was about those 5 top cryptocurrencies, and someone was following up in the chat on that. So really, because you broke it into those 3 categories, really the only cryptocurrency that you really believe in is Bitcoin. Like, you think that's the big player, that's the one, if someone's going to invest in cryptocurrency, that's the one to go with?
Yeah, here's the way that I think about kind of the investment case for this stuff, right? So we spend a lot of time talking to endowments, pension funds, et cetera. I think we're the only asset manager in the United States to manage public pension money. And so the way that we think about this is Bitcoin itself is such an asymmetric opportunity. Either you lose all the money you put in, so kind of 1x downside, or it is going to be exponentially more valuable than it is today, right? 10, 100x, whatever it ends up being. And so when you have such an asymmetric asset like that, you're not going to go take 100% of your portfolio and put it into it, right? Instead, what we see most people doing is anywhere between 1 to 5% of their portfolio. So they kind of size the risk correctly in the portfolio. And if it ends up working out and being this super, fast appreciating thing, then great, you're going to make a great return. But also, if it ends up not being worth anything, your 1 to 5% allocation is unlikely to be detrimental to the long-term health of your portfolio. And so the reason why we think of that kind of 1 to 5% allocation is really because it is still asymmetric, right? The idea of a new global reserve currency being built on the idea of separation of state and money is a big idea. If that works, it will be incredibly valuable, but the odds are actually stacked against it, right? That's very unlikely to happen just based on what we know in the world. And so what I think people have to understand is most investors, right? If you go talk to the best people on Wall Street, I've got these guys come on the podcast all the time. They will tell you the best investors in the world are only right 55 to 60% of the time, which sounds like a pretty low number, right, for the best investors in the world. But the difference is that even though they're only right 55 to 60% of the time, they always position themselves in these asymmetric opportunities. So they're always looking for a situation where, hey, if I lose, I have a very kind of capped downside. But if I'm right and it goes my way, it is exponential upside. And so when you're able to kind of stack that risk reward kind of equation in your favor, you are only right 55 to 60% of the time if you're the best in the world. But that 55 to 60% of the time more than pays for all of the times that you're wrong. And so I think Bitcoin is kind of the epitome of that type of investment. But again, you don't need to go put a big part of your portfolio in. Doing just 1 to 5%, I think, is where most people are sitting today.
1 to 5%. Okay. Interesting. I'm going to rapid fire a few questions that we have here.
Let's do it.
How can we withdraw funds from crypto to use if we ever need to? How much do you need to open an account, and is it linked to your bank account? And is this a fad or will it continue? Is it safe? Those are 3 different questions from 3 different viewers. And if you need me to repeat them, I will.
Yeah, so basically, most people will buy Bitcoin through some sort of technology platform. In the United States, the big ones are things like Coinbase, Kraken, Gemini, BlockFi, etc. You literally go in, you sign up just like you would sign up for either an online bank account or a brokerage account, put in your information, you connect a bank account, move fiat money onto the account. You then can buy Bitcoin or buy other cryptocurrencies if that's what you wanted to do. You hold it. And then at any point, if you want to withdraw it, you can either sell it, obviously, for fiat and then withdraw the fiat, or you can actually withdraw the Bitcoin either through using it to buy something, or you can withdraw it into hardware wallets and all that kind of stuff. In terms of I think one of the questions was around, is it a fad or is it not? The way that I basically describe this to people is you don't want to get in the game of speculating on whether something's a fad or not, right? I mean, again, that's why I go back to kind of that 1 to 5% allocation is you basically want to be positioned where if it ends up working, you make money. If it ends up not working, then you end up not being fatally hurt. And so I think that rather than trying to kind of guess what happens in the future, I always try to position my portfolio in a way where I'll benefit on the upside, and on the downside, I'm comfortable with that loss. Now, the last thing I'll say is in terms of buying Bitcoin and things like that, the number one thing I can tell people is this is a hyper volatile asset, right? If you go back and look at Amazon, for example, when Amazon went public over the last 20 years, Amazon has been one of the most volatile stocks. It has had a double-digit drawdown every single year. The average intra-year drawdown of Amazon stock is over 30% on an annual basis. Yet it is still one of the best performing stocks since it's gone public. And so what you find out is that innovation is highly volatile, right? There's lots of ups and downs. One time Amazon drew down over 90%. Bitcoin is very similar to what Amazon stock did over the last 20 years. It's very innovative and it's very volatile. And so you will literally see 10, 20, 30% swings in a number of days. And so it's important that people understand that that volatility exists. 2, they have the stomach for it with a small portion of their portfolio. But also 3 is to take a very, very long time horizon, right? Buy it, hold it, don't look at it for a number of years, come back, and it's either going to be worth 0 or it's going to be worth an incredibly more amount of US dollar value.
Yeah, good point. Good point on that. Okay, this is a great question here, and we'll get you out of here with like 1 or 2 more big questions. In the past, gold and Bitcoin moved in sync, but lately, like the last 6 months, the trend is more and more independent from each other. What's the reason for that, and how do you feel about gold or silver has been used to back up more crypto moving forward, even had over 33 coins fail when they tried to do it? What do you think about the gold
Yeah.
and silver question?
So let me kind of zoom out even further than that around correlation in general. So historically, Bitcoin has been a very non-correlated asset, as is gold normally. So Bitcoin's correlations are averaged about 0.15 compared to equities, for example. In times of great global instability or uncertainty, we've actually seen Bitcoin even become negatively correlated. So at one point in 2019, it was, I think, negative zero point 0.9 to equities, negative zero point 0.8 to gold. And so there's been a lot of people who said, hey, I love the idea of a non-correlated asset, put it in my portfolio. It actually reduces the overall risk of the portfolio. In recent weeks, over the last, call it 75 days or so, there's been very high correlation between Bitcoin, gold, and equities. And what people need to understand is that is because we were in a liquidity crisis. I would argue we're still in the liquidity crisis. So go back to 2008, 2009, gold dropped in 2008 over the summer of 08, 30%. It then rallied almost 200%, ended up hitting an all-time high in 2011. And so what happens in a liquidity crisis is people look around their portfolio and say, what do I have that has a liquid market that I can sell and get cash? And so everything goes down at once. Then the Federal Reserve steps in. They say, we're going to drop interest rates. We're going to print all this money. And they pump asset prices up. And so that's what we've seen with gold, Bitcoin, and equities. Paul Tudor Jones recently added about 2% exposure to his portfolio to Bitcoin, right? He's a kind of a legend of Wall Street. And in the letter that he announced this in, he basically said, when all asset prices rise, you want to be betting on the fastest horse. And he believes that Bitcoin is that fastest horse. And what that means is Bitcoin is the most volatile out of all of these. And if all asset prices are going to go up, you want to be exposed to the asset that has the likelihood to go up the most. And he believes that's Bitcoin. I tend to agree with him. And so I think that's a key piece of the correlation is that right now the market is being manipulated by central bank actions. That's why you see a dislocation between stock prices and economic data. And ultimately, that's where you want the exposure to Bitcoin is because it's so much more volatile than all those other things. So far this year, Bitcoin is up over 35%. I think it's the best performing asset class out of all assets. And I think that trend will continue over the next couple of years.
A couple of other questions, rapid fire here. Is it worth it to mine crypto? We'll get to that. What is the smallest amount that you can invest? And you mentioned cryptocurrencies such as Ethereum, not tied to the stock market. However, as of late, I can see a trend in crypto markets that somewhat mirror that of the stock market. Is this just a coincidence? So what about the relationship to the stock market, crypto? Take me there first, and then we can get into mining and how much you can invest.
Yeah, so basically the thing to remember here is crypto and the stock market are dislocated from like a fundamental standpoint or a value standpoint. So there's no relationship between Bitcoin and, let's say, Amazon stock, right? They're driven by completely different things. Amazon's driven by GDP, revenue, EBITDA, monetary policy, and the fiat system, all of those things. Bitcoin is driven by something completely different. It's driven by network effects, by computing power, by supply and demand, all of that. And so people like to kind of compare them just because they're all assets that have price associated with it. But ultimately, cryptocurrencies are much more akin to like a commodity or a traditional currency than they are to the stock market. In terms of what's the smallest amount that you can invest, the beauty of Bitcoin is it's highly divisible. So whereas a stock, it's been a big kind of inflection point in the stock market recently to do fractional shares. So I can, buy $10 of an Amazon stock. Bitcoin is the same thing, and it always has been. So you can literally go buy $5 worth of Bitcoin on any of these cryptocurrency exchanges. A Bitcoin today, a full Bitcoin trades at like $9,500, give or take. But you can buy, 0.0001 of a Bitcoin and put very small amounts of money into it. And then I forget the third question.
I think that was mining. Did we mention mining, right?
Yeah. So on the mining front, what I would say there is mining makes sense for people who have access to incredibly low cost electricity. Mining does not make sense if you're going to try to do it at home or have any sort of high electricity costs. So mining is basically very similar to a data center. The number one input from an expense standpoint is the cost of electricity. If you can't mine at, call it, 2 cents per kilowatt or less, mining probably isn't going to be super profitable. It may be cool to just buy a machine, see how it works, set it up, run the network and the software, and kind of participate. There's a lot of people who do it for non-economic benefit. But if you simply are looking at it as a pure investment, the number one thing you've got to ask is how low is the cost of electricity? If it's low enough, go ahead and do it. If it's not low enough, then you're better off just buying Bitcoin if you want to get exposure.
Okay, great. And finally, can you move your 401k over to crypto? Under the CARES Act, you can take out up to $100,000 right now and move it. You can buy real estate. Can you do it to crypto?
So this, if you'd asked me this question 4 weeks ago, the answer was no. The only thing that you could do is you could basically use your tax advantage dollars and you could buy something like GBTC, which is a publicly traded trust that gives you exposure to Bitcoin. The issue with GBTC is that it has a premium. So it trades at a premium to NAV, and that premium can be somewhat volatile. It can be 10 to 20%. It can go all the way up to 80 to 100%. So you're playing kind of a game of fire with that premium, but that is one way to get exposure with tax advantage dollars is buy GBTC in that account. Now, there's a new company, and actually they're a recent sponsor of our podcast, but what they've done is they've created a self-directed IRA product. It's called Choice. So just the website's just retirewithchoice.com. And what they do is they allow you to buy actual Bitcoin, hold your private keys, right? So you have control of them and use tax advantage dollars to do it. And so they're the first one to really crack this nut where in a regulatory compliant way, you can use tax advantage dollars to buy actual Bitcoin and then hold that without having to only get exposure through that kind of premium driven GBTC.
Fascinating. Fascinating. So where do you see, as we wrap this up, Anthony, where do you see Bitcoin, cryptocurrency going through this pandemic and over the next year or so?
Yeah, what I tell people is I could sit here and talk till I'm blue in the face about what I think is going to happen. My ultimate kind of arbiter of truth is what have I done in my portfolio? And so I'm pretty notorious at this point for having taken 50% of my net worth and put it into Bitcoin. This is not something where I invested, a little bit and it grew to be 50%. As I literally took 50% and I put it in. And the idea was there's two financial systems being built. One is a U.S. dollar fiat system that is kind of, I call the legacy financial system. And the second is this new alternative financial system that's denominated in Bitcoin that's created in a very programmatic way. And so I basically have exposure to both on an almost 50-50 basis. And the reason for doing that is I believe that the legacy system will continue to be there. I think that is a very conservative bet. I'm young, I'm 32 years old. I've got a very high risk tolerance.
Unfortunately, we lost Anthony's signal right when he was about to say goodbye. So my thanks to Anthony Pompliano for joining us on the show today to talk about cryptocurrency. We'll have Anthony back. We lost his feed for some reason, but thank goodness we had such a great show with him earlier. But he was wrapping things up by talking about having over 50% of his money in a portfolio for cryptocurrency of Bitcoin. 50% of his money in Bitcoin. And I've got my money in cryptocurrency right now as well. Not all of it, but I have a good portion of it. And our thanks to Outlet. If you want to sign up and get at least a 6% interest savings account, right now it's at 8 1/3, 8.3% interest. It's available if you go to morrisinvest.com/outlet, sign up today. They'll deposit free money in your account when you open the account. Try it. Open it with $5, open it with $100, and just watch. It's right now at an 8% interest rate, and it's backed by cryptocurrency. Backed by crypto, so it's not tied to this printing of money Federal Reserve. It's tied to cryptocurrency, which I'm buying a lot more of and putting a lot more money into because of where this is going. It's the people's currency. So my thanks to Outlet for sponsoring that show today. I appreciate it. Again, check them out. Go to morrisinvest.com/outlet to sign up for that account. And I know it's not available in some states. I think New York, I think Texas. There's 6 states that they're working towards their approval on. So just hang tight on that. But they will deposit money into your account if you use that link. Okay, they'll give you a little bonus for signing up, which is nice of them. So thank you for their support. And thank you to all of you for downloading and subscribing to the show. I really appreciate your support. We'll be back here again tomorrow with another episode of Morning Invest. Grover says, much love to you. Where is that dog? Is he running around there? There he is. My son's still playing with the camera over here. Grover, say goodbye. Say goodbye. Say goodbye. Bye, everyone. We'll see you tomorrow. Thanks so much.